Good morning, ladies and gentlemen. I'm pleased to welcome you all to this virtual press conference where BK Group is going to announce its 2022 financial performance. My name is Audrey, and I will be moderating this session. So on this call, we have BK Group CEO, Beata Habyarimana, Bank of Kigali CEO, Dr. Diane Karusisi, and Bank of Kigali CFO, Anita Umuhire, who will take us through the financial performance for Q4 and the full year 2022. So after their presentation, we'll also have a Q&A session. You are welcome to raise your hand if you have a question, or you can also drop your question in the chat. So without further ado, I would like to welcome BK Group CEO, Beata Habyarimana, for her opening remarks. Thank you.
Thank you. Good morning, and thank you for joining us. As BK Group today will present its financial results for the end of the year 2022. Globally, the financial year of 2022 has been characterized with a resilient growth. Despite of the global shocks we have been facing, like the crisis with the Ukraine war in February last year, the global commodities and price hikes, especially with the energy and food, the global economic growth has been recording a 3.4% increase in 2022. And we have seen also like China reopening to the world. In Rwanda, at the national level, we were glad to witness a consistent economic performance with an economic growth rate of 3.4 in 2022, despite the global economic challenges and the unfavorable weather conditions we have been experiencing throughout the year. The real GDP grew by 8%, especially due to the rebound of the tourism sector, but I've also been happy to witness exports growing up by 33%, as well as the imports. We have, during 2022, experienced inflationary pressures, though monetary measures were in place to cool it down. But still, we have witnessed the rise of the central bank rates from 4.5% to 7%. But according to the current central bank figures, we expect to see the inflation going back to the usual benchmark of less than 8% by the end of the second semester of 2023. We are glad to see that the financial sector stays sound with strong capital adequacy rate overall the sector, a good quality assets, and we have almost doubled the liquidity ratio requirements. We consider this as a good buffer, though we keep monitoring the evolutions of the global shocks. For BK Group, we are happy to announce that the financial year of 2022 has achieved outstanding results and strong performance across all its subsidiaries. Thanks to the post-COVID recovery measures, BK Group has focused on improving the assets quality and has focused on the profitability. We are glad to report a net income for the year 2022 of 59.7 billion Rwandan francs, around 55.8 million USD, for the financial year of 2022. And happy to record a double-digit increase of 15% year to year. For the key items, our books have shown an annual increase, be it for the total assets, with an increase of 16%, for the net loans, with an increase of 14%, for the deposits and the shareholders' equity, all recorded double-digit increase. BK Group remains with a higher compound annual growth rate over the banking sector in all those categories. We are glad to report that we have an earning per share, which will, through the recommendation of the Board of Directors, recommend a dividend of 32.5% per ordinary share to be approved during the annual General Assembly meeting of the shareholders. Pleased to present to our shareholders and investors the sustainability of the BK Group financial position results. As the year 2022 has been featuring key business highlights, we go on with our digital transformation journey. We have seen business activities being initiated and partnership with key players, and we look forward to the year 2023 with confidence. For this year, 2023, among the activities we expect to have, I would like to share that we have already launched our 5th subsidiary, the BK Foundation, in January 2023, putting under one single umbrella all the CSR activities BK has always conducted over the years through each and every subsidiary. The foundation also have a specific focus on ESG framework across the group and for the beneficiaries to better engage ourselves in various sustainability opportunities and to generate value for all our organizational and stakeholders. We take great pride in our investments towards our digital transformation journey, and we hope for this year to bring on board more digital products, keep automating our processes for a better customer experience. BK Group strategy looks at developing and maximizing the shareholders' wealth, and we stay confident that with the achievement of 2022, it gives a good promise for this coming year, 2023. Thank you. I will give the floor so to the BK CEO.
Thank you, Beata. I think Beata has said it all. BK Group, again, this year did not disappoint. When you look at our net income of 59.7 billion, which is 15% higher than what we recorded last year. And this performance is driven by a number of things. I think I would say, first of all, is improvement in asset quality. We, at BK, at the bank, we recorded a cost of risk that is at an all-time low, at below 1%, which is quite commendable. Our teams focused on monitoring loans, but also recovering, and we had some important recoveries in this last quarter of the year. The other big driver of our performance has been non-funded income. You've seen our non-funded income increasing by 25%. It's been a very important focus for the bank for the past years, and we are happy to see these efforts yielding commendable results. And this is driven by our guarantee fees, trade finance fees, but also we had a very good year in terms of FX business, where our FX desk recorded a significant financial performance. Finally, we have a good growth of our deposits by 10%, despite the costs of funds that have been increasing, and you can see an increase of the cost of fund by about 100 basis points, which is quite high. And this is driven, like Beata was saying, by the cost of money that has been increasing with the central bank rates increasing from 4% to 7% as of now. And overall, of course, our business is financed by lines of credit from development financial institutions, DFIs. And also there, the cost of funds has been increasing. But so far, we've not yet increased our lending rates, but we believe that we'll see the repercussions of this increased cost of funds this year in 2023. So these were the highlights for the year. In terms of processes and deliverables, we launched BK Digital last year. We launched a new app, a new internet banking platform that are fully developed in-house, and we take great pride in that. We also worked on our customer experience, automating our processes. Although, again, last year was difficult with post-go-live issues that we encountered as a bank that got resolved towards the end of the year. So these are the highlights I'm happy to share, and I look forward to interactive discussion with the media. Maybe Anita, our CFO, also wants to share some few highlights on the financial performance. Thank you.
Thank you, and good morning once again. I will share a little bit more detail into our financial performance for 2022. As has been mentioned, for the group, our consolidated net income was 59.7 billion, which was a year-on-year growth of 15.1%. So the group's performance is largely supported by the bank, which, as has been mentioned, we saw a stagnant growth in our net income due to the rising cost of funds that has been discussed. So this brought our net interest margin to 9.7%, down from 10.7% the year prior. Therefore, our growth in performance was largely supported by a healthy growth in non-funded income that increased by 23.9% year on year. We've seen very good results on trade finance products, FX income, and fees on our digital channels, which attest to our digital transformation agenda. The growth in net income was also supported by efficiency in loan monitoring that resulted in an improved asset quality, which consequently saw a reduction in our loan loss provisions by 24 billion. OPEX increased by 33.9% year on year, mainly due to our post-go-live activities as we migrated onto a new core banking system at the end of 2021. Looking at the financial position of the bank, total assets increased by 16.6% year on year to 1.5 trillion Rwandan francs, boosted by funding base that grew by 10.6% on customer deposits to 1.1 trillion Rwandan francs, supported also by 281 billion Rwandan francs in deposits from other banks and a long-term finance of 103 billion Rwandan francs. Loans and advances to customers grew by 14.6% to 1.1 trillion Rwandan francs due to a realized pipeline of corporate deals and a booming SME and retail portfolio. Looking at our other subsidiaries, BK Insurance registered a profit of 2.8 billion in 2022 compared to 2.7 billion Rwandan francs the year before, representing a 1% growth in profitability year on year. Gross premium decreased by 1 billion to 11.1 billion due to a departure of a key client of motor insurance, which is the biggest earnings contributor. However, other product categories saw good growth, particularly agriculture-related insurance, which saw a year-on-year growth of 23%. Total assets for BK Insurance, general insurance, increased by 11% year-on-year from 21.7 billion Rwandan francs to 24 billion Rwandan francs in 2022. Looking at BK Tech House, they registered a sales revenue of 1.2 billion in 2022 compared to 1.1 billion the same period the year before. BK Tech House recorded a profit after tax of 183 million Rwandan francs in 2022. Tech House digital platforms registered a 13% increase in user base, surpassing 3.3 million users on all 5 digital platforms. Urubuto Pay experienced significant growth in all areas with a year-on-year increase of 23% in the number of merchants, 176% in transactions volume, and 21% in transaction value. Urubuto Education System saw a 28% increase in the number of schools it serves. BK Capital had an operating income of 1 billion, a stunning 77% growth year on year, stemming from corporate finance and advisory services as well as fund management and administration fees. Profit before tax was 306 million Rwandan francs, an excellent year-on-year growth of 198%, further supported by efficient cost management. Assets under management for BK Capital grew by 58% year-on-year to 33.3 billion, largely driven by the Aguka Unit Trust Fund, which increased 7.2 billion Rwandan francs. Looking at some of the key ratios, our return on average assets is 3.5%, and our return on average equity is at 19.8%. In terms of efficiency, our cost-to-income ratio is 46.6%, up from 36.3% the year before due to the higher OPEX that we discussed earlier. Asset quality has significantly improved, as discussed. Our NPA ratio for the year was 2.6%, from 5.3% the year before, with the cost of risk, while the cost of risk was 0.9% from 3.4% in 2021. Our capital requirements are comfortably above statutory requirements, with a core capital to risk-weighted assets of 24.4%. As mentioned, the board has recommended a dividend of 32.5 Rwandan francs per ordinary share, which is a 50% payout ratio of the group's net income for 2022. This is a good trend, second year in a row of a 50% payout ratio and a 13.2% in the dividend per share. This is a strong performance indicator and signals a positive outlook for the group. Thank you.
Thank you to our executive team for a very good presentation. So I would like now to welcome our media partners for the Q&A session. You can raise your hand or you can also post your question on the chat. Thank you. I have a question from Jackton Lawi. He's asking, good morning, I'm Jackton Lawi from the Star newspaper in Nairobi. Congratulations on the impressive performance. You just want to know if you think your operating expenses are at an optimal level.
Thank you, Jackson, for the question. Our operating expenses are clearly not at an optimal level. Our plan is to come back to an efficiency of below 40%. I think it's the first time in many years that we've recorded cost to income that is more than 40%. This was mainly driven by consultancy fees that we faced during our post-go-live issues, as we're trying to address all the post-go-live issues. This year we have a big focus on cost efficiency, and we hope to take this ratio back to below 40%. Thank you.
We have another question from Michelle Anzaya. She's the CEO from CEO Africa in Nairobi. She's asking, what was BK Group key performance driver in 2022? And do you see this being replicated in the current financial year? Okay, so the management team is recommending to take more questions and then they will answer together. So we have also a question from Juma, from Soko Directory in Kenya. He's asking, any plans for BK Group to raise capital from shareholders on the capital market in 2023? Those are the... Okay, we have another one from Shadrach from The Times in Kenya. How is the BK Arena partnership going, and are there other similar partnership in the offing? Thank you.
Thank you for the questions. I'll take the question on drivers of growth in 2022, and if we see them replicated this year, and also the question on BK Arena. And Beata, our Group CEO, will address the question on capital raise. So the drivers of growth in 2022, as Anita mentioned, were mainly cost of risk reduction. We've released significant amount of provisions. Also, the increase in our non-funded income. We improved our non-funded income by 25%. So we see these still being drivers of growth this year. When we look at our portfolio, it's quite healthy. The post-COVID recovery is real in Rwanda. We don't see any segment that is at risk or any sector of the economy that is at risk when we look at our portfolio. In terms of non-funded income, because of this is something that is positive for us because of the increase in commodity prices. All oil marketing companies, importers, have had to, increase their trade finance lines, which came with improved income for us, and we see this continuing this year. Also, our FX desk is recording already a very good income for the first months of the year. So we believe non-funded and cost of risk that will be contained below 1.5% are going to continue being drivers of growth in 2023. For the question on BK Arena, this was a great partnership that we closed last year. This has improved our brand, and we have a prepaid card that is linked to this BK Arena partnership, and we've seen sales of these cards. But beyond that, I think the most important thing was to the brand value of this partnership in the demographics that is, we want to target the youth. And we've seen many young people coming to BK and to open accounts, to seek our services, and we believe that it's positive. So we'll be probably releasing maybe by June this year, because we have a big event happening in May, which is the BAL, Basketball Africa League. And we believe this will attract a lot of youth from across the continent, and will further enhance the brand value and the value we see in this partnership. So I'll let Beata tackle the question on capital raise for the group.
Thank you, Diane, and thank you, Juma, for the question. I think if you just refer to the current financial results we have and happy with the dividend, for the last year of 2022 and 2021, BK has engaged in significant investments from the technology to be able to go through our digital transformation program in place. We look at rather stabilizing the digital products we would like to produce, as well as automating our processes. You can also see it through the current value we give to the shareholders with the dividend ratio and to be paid on the ordinary share. For this year, 2023, there is no specific raise of capital expected, as we look at first bearing some fruits of the huge investment we have done for the last 2 years.
So we have one more question on the chat from Samuel. He's from Pan-African Visions. He's asking, apart from unfavorable weather challenges, what other challenges you faced in 2022?
At the group level, it's correct that the last year we have had an unfavorable weather condition, which has been affected the agricultural harvest expected, and which also had an impact on the domestic inflation. But in the same time, we all know the different shocks we have had globally, especially related to the Ukraine war, where we have seen that some commodities have been having the prices going up for energy and non-energy products. We have been able to stabilize it, and we think that with the current economic recovery over the world, the expectations of 3.2% globally and 2.9% economic growth in Rwanda will facilitate for this year 2023 to have a better condition. For the present moment, those have been the two indicators at the global level, but then technically we have also been witnessing the cost of funds going up, though it didn't affect extremely our financial results.
There is one more question from Jackton Lawi. We are witnessing financial shocks in the global finance sector. Do you think this may have an impact on your operations going forward? And then there is another one from Kelvin from Kenya Business Watch. What is the projected digitization dividend in 2023?
Thank you, Jackson, for the question. As you can imagine, being a bank executive across the globe is not a fun thing these days, as we're going through a global banking crisis. We are looking very closely at the causes of these failures, and most of those are maturity mismatch and also liquidity. And as Beata has said, our liquidity is very strong. We've doubled our liquidity LCR, the ratios. We also look at our maturity mismatch. The board has required us to look at the mismatch between our liabilities and our assets, and we are working on that. But so far, we believe we're in a strong position, and we don't expect to have any issue there. So when you look at the last financial crisis, it was the story was about credit quality. So in the past decades, everyone was looking at credit quality, and all the capital enhancements were looking at credit. This time around, it's not about credit. It's about liquidity and interest rates. And this is something that we're monitoring very closely. But so far, we don't see this affecting our operations. You can imagine that we work with various banks across the globe, and what you're doing is to diversify our deposits to make sure we don't have a high exposure with a single organization. And we believe that even the crisis is going to be contained after the two high-level failures that we've seen globally. So the other question was on
what is the projected digitization dividend in 2023?
So this is interesting because we had a big exercise to migrate our customers to our digital channels. We reached 80% of our customers migrated to digital channels, but we want to drive usage. This is an exercise that is going to happen this year. Beyond just registering a client on a channel, it can be the app, it can be a USSD, it can be internet banking. We want them to start transacting. So we have a big campaign to raise awareness, to educate our customers, and we believe this will come with cost efficiencies, as people will not go to our branches, but rather will transact digitally or maybe transact with our agents. So we see cost efficiencies, but we also see an increase in the fees because we'll be able to have more clients transacting digitally. Something that we are launching next month is an account opening that is fully digital. So we want someone who has a Rwandan ID to be able to open an account with Bank of Kigali digitally without visiting a branch. And we'll be targeting our diaspora. And we believe that it's an opportunity for us to get more clients, but also look at the remittances that the diaspora bring to Rwanda. So we believe that cost efficiency is going to be a highlight. You'll see that this year, but also increase in our non-funded income.
And there is one more question from Kelvin. He's asking, what is the bank doing to further reduce or eliminate the COVID-19 pandemic-related NPLs in its books?
Thank you. I think probably it's in the release. The COVID-19 related restructurings have reduced significantly to below 2%. And these are typically hotels that were restructured during COVID that have not managed to come back to business. So what we'll be doing is to discuss with these owners or business owners to see what can be done. We are discussing with other partners to see how we can refinance and revamp the businesses of these organizations. But we believe it's impossible to completely eliminate the outcomes of a pandemic that was devastating. But we believe all the efforts that the government put in, Economic Recovery Fund, etc., have really minimized the impact of COVID-19. We expect a very good year for the tourism and hospitality industry with a number of events that are lined up until the end of the year. So we expect this sector to still be performing, booming, and thus servicing the facilities with banks.
More question from Samuel. He's asking, what are your plans or major projects for 2023?
I think for the 2023, we are going to keep having the same performances, even be going beyond. But we would like to go deep with having automation of our processes and having digital products across the subsidiaries of BK Group. We are going to keep having high income from the insurance on agricultural products, but also being able to extend and to stabilize for the subsidiaries of especially the BK Foundation and the Tech House to be more serving a broader digital platform of clients. I maybe give also the floor to Diane for some few outlets.
Thank you, Beata. So end of last year, we launched a product, a smartphone financing product, together in partnership with MTN. This has been the fastest growing product that we have at the bank. So typically, people can get access to finance to buy or to get a new smartphone. We believe that we want to enhance these products, but also look at other partnerships with telcos. And we want to see new products in partnership with telcos launched in the course of the year, which will again significantly contribute to our non-funded income. Thank you.
So we are going to wait a few minutes to see if there is any other question that is coming in before we move to the end of this event. So as we move to the end of the event, we would like to invite BK Group CEO to give her final remarks. But if you have a question, you can still send it and we'll be able to answer offline. Thank you.
Thank you. Thank you for attending this investors call. We're happy to say that the performances the BK Group has been able to show for 2023 are due to also the high commitment of all the employees of the group, which also reinforces our position as a leading company as in the banking sector, in the financial sector. We remain committed to delivering higher value for our shareholders and investors, and we are confident to continue to achieve even better results for these 2023 years. So we thank you all for attending.